Hey, good evening, guys. Kenneth Tortoise Capital Foundation's Q&A check-in for July 21st, 2023. So let me just get a quick check-in from you guys, see how you're doing. Brian, you all right?
Yeah, Ken, no, I'm pretty good actually, thanks. Yeah, just sort of going through a bit of a drawdown at the moment, which I'm trying to figure out why that's happening. But other than that, no, I'm really, really good.
I think time of day and the instrument you're trading. The time of day you're trading
And
DIA is really hard, I think.
and that's just a reflection of the place where we are in the market at the moment, right?
And the timing of the instrument, when that thing moves during the day compared to when you're trading it. Uh,
Hmm.
that's I might be looking at the Aussie dollar if I was you.
Okay, right. Thank you.
Yeah, because I think that has a little larger, shorter moves than the great big fat DIA. I'd invite you to start looking at the Aussie 5 minute.
Okay,
That's
thanks,
that,
Ken.
that seems to be helpful to Luke and the boys for your time of day.
Okay.
Um, why isn't that? There we go. Okay, Greg, how we doing?
Doing well. Spending some time to break down each step. It's sort of like a binary flow chart. So you hit a decision and you either go left or right.
Yeah.
So writing all that stuff out to try to simplify reduce any cognitive load, and yeah, just ironing all that out is fun. I have my kids screaming in the background. Sorry.
No worries. Been there. You'll miss it when it's gone. And Damien, how are you doing?
I'm doing fine. I had a good week so far. After the reset of last Friday, we're good. I had a good conversation with my aunt, uncle, and cousin today. Well, I should say yesterday. What am I talking about? And everything is good.
Why is my pen not working here? There we go. Okay. And Lou, how are we doing today?
Good, thank you, Ken.
All right. All good here. We had a good training session with Mark Matthews of the Ohio State University as a research student in his doctoral program under Angus Fletcher at Ohio State, who does our creativity science work. And I've also introduced Mark to my mentor, David Boji, for true storytelling. And he and I are working on forging the alloy between those two significant bodies of work. It turns out that narrative inquiry um, seems to fuse the true storytelling of David Boji and the story thinking and story science of Angus. This is Angus gives you a much more Western, grounded in science and psychology approach, neuroscience to narrative. And Boji comes from the world of literary interpretation and analysis, kind of the postmodern, almost postmodern critical thinking style. And the blend of those two things really has an amazing synergy. And then I try to add humbly my trading practice, the direct action into the so what of action in the world that I think adds a nice grounding in practical reality. There's nothing more practical than the stock market or the forex market in terms of checking your science at the door, and checking the quality of your craftsmanship. So that's what I bring to the table. So we had a really good session. We brought him in from his 50-week, 50-state tour. He's in state 41 this week, which is Kansas. We brought him in and had a 4-hour session with the military officers in my college, and had a great discussion, planned out some research for the year ahead, including some work that I have him do for our traders. And that very much has to do with the idea of the accountability piece that you guys were talking about. Like we talked about, safety, trust, truth leads to opportunities, that you want the opportunity to succeed. And if you propose to do that in a group that are connected by values of trust and truth telling, and you've created a safe space in which to do that, it's possible for you to see the elephant or the market, each from your own perspectives, and share that information and gain the benefit of multiple points of view simultaneously, which you cannot get individually. If you try to do that yourself, if that's where your start point was, it takes you 5 years to develop expertise over here, on the purple dot, to adopt that new mentality, and then 5 years to get expertise in the orange dot, and 5 years at the yellow dot, and 5 years at the green dot, and 5 years at the light blue dot. And at the end of trooping that line, it could take you 25 years to develop expertise in all of those so that you could, by yourself, gain those insights. Except that in the 5 years that it took you to do each of these, the previous knowledge is getting a little bit out of date. So you got to figure out how to maintain currency in all of the masteries that you've developed, while you're also gaining the new proficiencies. So by definition, a network approach to understanding complexity can be far superior structurally to the individual Lone Ranger. So if you want to benefit from that, what you really want is true story circles that are based off respect for common values and agreements about how we're going to proceed. That we're going to establish safe spaces in which we can learn to trust each other in much the same way that if we've got our inner vulnerabilities in here and we surround that with layers and layers of protective clothing and like an onion, and that's really good survival behavior compared to a world that wants to eat you. And so you learn that on that avenue of approach, you have these barriers that you can present at false faces or defensive barriers, and in order to defeat the world. But then you say, well, somebody else comes from this direction and proposes to be my ally. Do I just take their word for it and say, oh, well, here's the fast track to the inside of my deepest, most dangerous vulnerabilities? Please come in and spend some time inside my weakest moments. Well, that turns out to be a great idea if the person that's you've invited in turns out to be a person who has all of the same values that we seek in the true story circle, care for others and so forth. But if not, that's an invitation to pain and suffering. And when you're young and naive and you get heartbroken or betrayed, you end up getting some scar tissue, and that's where those accretions start to develop. Well, how do I validate this person that is a potential to be one of these people in my circle? Well, if I can create a safe space in a true story circle, and you can have learned to trust me to do that, then the people that are invited in, you are in a learning and growing space, which is ideal to quickly determine who is trustworthy and how much and how fast. And the faster that you can learn to trust, the more truth you can learn to tell and listen to. So what we are essentially doing inside that circle is creating conditions in which we can rapidly move from safety through trust to telling more and more truths, which inevitably leads to the opportunities. And because we're using stories to do that, we then can leverage the creative story science of Fletcher, who talks about techniques in our Creativity 202 course. We use those techniques and the shared checkouts and story sharing of a true story circle in order to really optimize the learning that goes on in an accountability circle. That's the same thing that you're doing inside an accountability circle if you are living up to those kinds of values that we have an agreement that we're going to abide by. And that is, you tell your own story only, that you don't judge other people, that you create a safe space for people to have those conversations, that you make time and space to ensure that all the voices are heard. And then if you can do that, you've accomplished step 1 and step 2 of true storytelling inside phase 1, which is creating the safe space and then listening to every voice. And then steps 3, 4, 5, and 6 have to do with restorying, which is really taking these hardwired lifelong stories that we have about ourselves and our trading and unpacking that box into various pieces and parts, and then learning how we can use our intention to change one feature of that story, whether it's a plot, a setting, a character, a sequence, a belief, a boundary, a location. And just by changing one of the pieces and parts of that story, we can create an entire new story out of the other members that we are pulling together. Because remember, these other things are just facts or beliefs or assumptions or assertions. What creates the meaning is the story that we tell in the red that ties all that stuff together. And you learn through the true story process and the story science process that once you've established this safe space in phase 1, in phase 2 you can do things like change the plot, change the location, change the setting, help things along the way with your trusted others like a team of writers. And that's what happens in the repurposing or the reworking in phase 2. And then in phase 3, step 7 is really a process of reflection, so that after each iteration of restorying and what if and how might this go differently, you're actually exploring from the original story, you're exploring all of these other story possibilities in the potentiality space, and you realize that you are free, that once you let go of the binding of that previous story, that going in the present, you can respect the past, but in the present you can conduct restoring and you can live new stories with new meanings by reworking other elements from your life. And then this whole process is the true storytelling process. And it's the intersection of true storytelling and sense making and the story science and story thinking that comes from Fletcher. And we happen to be using it when talking about our trading practice in order to be well grounded in a practical reality that allows us to test new stories and new hypotheses quickly. So my emphasis on the accountability groups comes with the recommendation that when you do those inside true story circles, as you see us do, whether it's the foundations check-in or more deliberately in the Creativity 202 course, you get the power of that true story circle to leverage all of those insights in a special place about the market. And that is an unfair advantage. Oh, no, it's fair because other people can do it if they want to. So it is fair. But it is an edge. It is an advantage, as we have seen time and time again. So I say all that simply to encourage you to keep doing the accountability groups without my presence so that you can be self actualized. So that was some of the work that I was doing with Mark Matthews today on and learning what he's learned by visiting 41 of the 50 states so far, spending a week in each state, living in people's homes with his magician friend, and they're using the power of magic to illustrate these principles at work. And here's how that works. The magician Donovan gets on stage, and then you think the world works this way. And then you watch him do something, and you say, well, he just broke my paradigm because he's either a supernatural being or my understanding of what just happened is not the same as what just happened. There's a difference between my understanding of the world, world prime, and my beliefs about the world, world zero. So when he reveals the trick, you realize, oh, to get from point A to point B, where apparently the impossible happened, all you need to do is understand the process. And when he shows you the process and realize, oh, that could be done by anybody with sufficient time and focus, and then Mark comes in and talks about the changing of our stories from story one or story zero to story one can be as simple as applying a process intervention that interrupts the old narrative and substitutes a new narrative, and you can learn to do those with techniques and with trusted others. And that's what happens through the insights of our trusted others and story circle. So I wanted to say all that. All right, so here's Lou's question. The Creativity 202 course is pretty amazing, I must also say. Let's see if I can get the drawing. All right, so Lou asks, he had some time and was working on Microsoft using the 1 minute charts for the first time. So he ends up buying the stock here. With this nice tight wrist box, as we do. And it picked up momentum in his direction. And so he placed the order to sell just under the VWAP in advance of it getting there. So he was setting a profit target. Wanted to get my thoughts on doing that, on whether or not it violates the rules. Is he not letting his profits run? Cut losses, let profits run. So here's my interpretation and application of Van's excellent thoughts on cut losers, let profits run, or let winners run. I'm a production machine. All right, I am an industrial machine that makes parts, and I'm a brick maker. So I sort of know what my chunks are, what the normal brick looks like. But there are some opportunities in which something special is going on, and I want to know what to do under abnormal conditions. So that's the mindset that I'm going to use to answer this question. So my thoughts on this, losers versus winners, I look at the number, of both, and I look at what the average of both is. That's so when you see us do that long stack of results, and we convert that into the analysis table, I'm looking at three things. No loss greater than -1, I'm looking for from -1 to +2R, I'm looking for positive expectancy. And then 3, I'm looking for fat right tails, that I have a chance to get wins greater than 2R. So if I'm in the histogram and there's my 0, and then I have a strict -1, and then I have a +2, what I'm looking for, first of all, is nothing out here. I want to cut that. And then between -1 and +2, I'm checking to see what my expectancy is. If my average win and loss comes out into here, my average performance is better than 0, then I've got a positive expectancy system. And then just in the land between -1 and +2, I'm making money professionally. And then in phase 3 of my checklist here, do I have wins greater than +2? And then those are gifts, which is what happens when you are diligent. I don't mistake these gifts for my genius in picking the right trade. No, it's just that sometimes these things happen when you follow the properly constructed rules. But as long as if I've got about 85% of my trades in here, and then 1 time out of 6 or something like that, I get better than a 2R, and I have nothing on this side, what I've essentially done is taken a normal histogram created by natural processes, and I've taken the fat left tail and moved that over here to the middle to push the average higher and to occasionally give me greater. So I've shifted the mountain to the right, 1/4 of an R or 1/2 an R, and then that's what leads to long-term success. So I say all of that simply to say, now I can start thinking about answering Leo's question, because I'm going to talk about this trade inside a trade framing process, which told me that this was a setup, this was a condition that gave me a reasonable belief that this could happen. Like if this move back to the VWAP happened, I'm not allowed to be surprised if I did the trade framing process and identified a return to the VWAP as a not unrealistic move. As long as that is true, and then as long as the amount of risk that I'm taking in this hypothesis, my hypothesis is that if this move, which started from here at a Z3 excursion, which was that far from the VWAP at the time, that went up in 1, 2, 3 legs and then stall, that is perfectly normal behavior. 3 legs up, stopping just short of the VWAP, and then the sellers take off again. But this time, they could only move it this far before it reversed. And before it was, so that's already a kata 2. And I know that in kata 2, it's possible to get past the previous high, or in this case, the RL10 high, and get to the VWAP. So I look at this and I say, well, in my trade frame, a return to the RL10, that's the first place where I would expect resistance. And I notice that you've got let me make that black. You've got 1 unit of risk and 2 units of reward to the first resistance target. I've got my 2 to 1. So now I've framed my trade. That's all I need to know. The fact that I got a kata 2 and a return to the VWAP and an intermediate objective of here, that's 2 to 1. And if it breaks through this, then the next place it could go to is probably the peak of the Z3, which might as well be the peak of the VWAP. So we're just going to call that the same thing. So this is in play, and if I do that, I get 2 more. So he's got a 4-to-1 potential. So now what do I think about having a profit target established up here or right here? Well, this is not the only time I've ever framed this trade in that style with this instrument. So I've got a bunch of statistics on how that thing turns out. And among those, I'm going to say, what was my histogram look like? But what was my average win? And what's the standard deviation of the wins? So this is if it just gives me a 0. This is if it gives me an average win for that trade frame. This is average plus 1 standard deviation. And then this is the max I ever got. So if I think of that in terms of, if I turned it on its side, I would think of some histogram that probably, looks like this. And then back to 0 because I cut it. I don't take anything worse than -1. If I have that in my mind, now I can say the boundary between normal results and abnormal results is my average win plus 1. So here I am, I framed it for 2-to-1 and took the trade, and now I'm holding 4, or it's coming into 4. Where is the line that tells me I'm into the abnormal space? If I'm already beyond that when I get past 2R, what if my average win is 1 and my average loss is 0.5? Then I have a 2-to-1 average winner to average loser. That's good. Then if I had something like a 50-50 coin flip and the winners paid 2 and the losers pay 1, I want to play that forever. But if I'm already past my average win now, and I'm into abnormal wins, my psychology now says, no matter what, I don't know how far this thing is going to go up. Could this be better than any trade I've ever had? Maybe. They also, the last time I had the best trade I ever had, it did exactly that. It went to what the previous best trade ever was, and it kept going. So I'm open to the possibility that this trade might be the one that becomes the best trade I ever had. So I'm willing to see. So I'm going to have some arbitrary statistical measure that says, if it gets this far and reverses, I'm out here because I want to preserve the abnormal gains, because I want to let my winners run and I want to cut my losers short to be consistent with what Van said. So in this circumstance, if you're already past the average winner, and in my view, if you're already past your 2-to-1, you set up some kind of trade frame and you said risk and 2 units of reward, and 85% of the time you end up it comes up in here and you get some kind of positive return, and so you get a bunch of things that are kind of in here, and this all turns out to be positive expectancy because you're managing your losses carefully. It turns out that you are framing a reasonable 2 that's manageable and achievable, because sometimes you get to 2, and you're framing a 1R risk that you're never taking losses greater than that, and it's positive expectancy. You can now say, I should always take that trade, and when I'm in the land beyond abnormal, I got to have rules that make sure that every trade that gets past average plus 1 never becomes a normal trade again. Okay? If you're ever past, if you're trading in this industrial style, where I want 100 opportunities a day, and I only have a span of control and capital to take 5 of them, that's what I want. I want 100 opportunities, and I can take the first 5 or the best 5. So I never have to take shortcuts because I want to trade. And it's been so long since I had a trade. I got to have a trade. So let me figure out how I can bend the rules so I can make this one work. I don't give a crap about that. I want 100 opportunities constantly coming to me, and I only have to pick the ones that jump right into my boat. I want to catch fish that jump into my boat. So I got to position the boat where the trout can jump into it. Well, if I'm trading in that industrial style, and I know what my average +1 is, as long as my average win is better than my average loss, and I'm somewhere around a coin flip or better, then I'm actually implementing Van's idea, which is I'm cutting my average loser short, and I'm letting my average wins run long enough that I have a positive expectancy given the rate of success. Now, if I have a 30-70 system of wins and losses, now suddenly there's an awful lot of pressure on the wins to have such big wins that it offsets the little ankle-biting losses. Now I really got to make every winning trade the most it can be. To me, that's a ton of pressure. Hey, to me, I'd like something that's like a 50-50 that pays 2-to-1 as a baseline. Let's go. Right? And if it's not working right away, I'll get out of it. But then it starts working, I'll just get back in because I didn't believe that any one trade was going to be the one that would make the difference. Whereas I'm in a 30-70 system, or worse, a 10-90 system. Really? Do you have a system if it's 10-90? Or are your rules finding reliable losers, and once upon a time something far beyond your control that's not governed by your rules gives you the occasional winner? That's what I think, because that's an abnormal process. You should be trading this one. Imagine you had that system and you just traded this, and then instead of taking the full multiple R loss, you just cut the loser short. That's that's the side of the trade I want. I want to sell lottery tickets. I want to be in the business of selling lottery tickets. That's the most reliable system there ever was because of the laws of human nature. So that deck is stacked against the monkey forever. So, inside of that frame, now what do I think about? It doesn't violate my rules given the following provision. You saw the COTA 2, you framed a nice tight trade, which you did. You saw a reasonable target. I want you to see this one as the 2R. That's the trade you're setting up. And if that does not fail, now you're into abnormal conditions where you're at 4-to-1. Hey, why don't I just hang out for all the 4-to-1 trade frames? Because there's more of them that'll give you 2-to-1 that start failing, and you cut it and you take 1.5, or you take 1, and you're managing your losses so that they come out around 0.5. And then you get a 50-50. I want a bunch of those. And then once in a while, they'll blow right through this and never come and hit your stop. And then once in a while, you get a 4R. That's my style of trading. That is a histogram that cuts the 1R loss and is open to the possibility that occasionally I get these fat right tails 1/6 of the time or 1/10 of the time, but I never take those. I've shifted the mountain to the right, and I'm positive expectancy between -1 and +2. So as I look at this on a 1-minute chart, and in a matter of 10 minutes, 6 minutes, you're holding 4, and you had a reasonable expectation of 2, well, yes, you can do that. Because if there was ever a place where it was going to fail, you would bet on the VWAP. Because the VWAP that is there that is declining means this thing is in a net sell posture, that for a while it was like this and then it rolled over, which meant that price was doing this. But now it went here. That's exactly the shape that you're in right there. The last biggest trend was this one, the downward trend. And here it couldn't even get to the VWAP, but it got to a Z3, so that was a hell of a move. But the move that brought it down into here was huge, such that the SSC, wherever the SSC was, that made that move, that made a Z3 excursion that failed, the move prior was bigger, which is why the VWAP was higher and declining. So this time it couldn't even get to the VWAP and it failed. And the first information you have that it might be becoming this is the fact that the previous bottoming over here, and then this RL10 right here, and now I want to draw your attention to the RL270. All of this price action was below the RL270. And now you got the first piece of price action that was above the 270, and it came to here, and then instead of failing back underneath like you're entitled to believe, like look at this. I don't know what the maximum excursion was to the downside, but here was an excursion above the RL270. That was a plus. And now this time it didn't even fail below. Now it's actually going to go to here. This distance from the RL270 to the peak of the RL10 is bigger than this one. So this thing is actually in a growth posture. For that to continue to be great, it has to get through the VWAP, which it couldn't do here, and it's getting very close here. So it's either going to go right away, or it's now inside this channel between the VWAP and the RL270. And this, in this case, it failed, and then you get leg 1, leg 2, leg 3, and now we're all the way back to where it was at the start of this 2 legs up. So we got to appreciate the moment that we're in right here, and we say level 1, level 2, it worked. Look how, when that broke through, those next 2 bars were excellent. Now this one went up and closed. Now it opened and sold off. So here's what that looks like. This peak moment goes up to the VWAP, and then it closes here, and then it opens here, and closes at the low, approximately. So I'm already thinking this is a 1, a 2, and now my 1, 2, 3 stop is right below that. In this situation, that's as far of a retracement as I'm willing to give back in order to preserve all of the abnormal gains which are above the average win, which is a 2R win. Check or hold? So if there was ever a place where this thing was going to fail after it gets above the previous resistance, the next place that it can fail is right here. And if you don't mind holding a 4R win in 8 minutes, then don't put the trailing stop there. Hey, so what if or don't put the target stop in there. What if I just decide that I want to take it, and there's 2 things that can happen after I exit right there, or 3 things. It's either going to just continue to blow right past this, or it's going to fail, or it's going to monkey around at the VWAP, which is what the VWAP is. The VWAP is this strange attractor. Whoop, that should be orange, sorry. So the VWAP is the strange attractor that as long as price is underneath it, it tends to be downward. But if it ever breaks above, then it has a chance to become one of those. The least, we want either one of those because that's going to allow us to be trend traders. But there's some kind of monkeying around that happens. Sometimes it dances around the VWAP, and we know that can happen. Well, if I take the exit, so let's just war game that out. If I take the exit here and it starts going up, what's my contingency plan? Well, I have to say, what's the time of day? What's the plus range stat move? Where's the next target? Is there some amount of price above the VWAP that I'm willing to say, that's the price that I want to give that much of a buffer because my hypothesis is that it has successfully cleared the VWAP. And that could also be the RL2, in this case, it has successfully cleared the VWAP, and now I can put a 1 unit of risk on, and I have same way that I did that trade frame before, I have a reasonable expectation of a 2-to-1. So what I've done is I've just decided that if I take the exit and it keeps going, what's my re-entry strategy? I should know that down here, because I had the VWAP, and I said, what was the furthest excursion away from the VWAP? If this breaks out, what's the furthest excursion above the VWAP? That'll tell me if I have 2-to-1 above, or I can go back to the previous peaks of this thing, and I can say, look, if this breaks above the 2R and the VWAP, the next target that I have is up here. So what if I what if I cashed I got my 2R, check. I got my 4R, and I decide to take that as a target, and now instead of failing, it just keeps going. Well, okay, now I already know from this moment and that framework, if there is a price beyond the VWAP that gives me 2-to-1, so I can already tell you that if I get out, I have to get back in here if I want that. And that's still a reasonable move. And I can consult, if this is intraday trading and that was the low, I can put a range stat on it and say, yeah, that range stat tells me what the maximum reasonable intraday move is. So if the short answer to all that is, I'm not opposed to a profit target to lock in a 3 times your average win in 8 minutes with 4R, as long as you are satisfied with the professionalism of the decision, and the professionalism is inside this trade frame wrapper, and then as soon as you take that exit, you're immediately at the 0 state, so you can decide if you're going to take that move or take the re-entry that way, so that you don't let the result and the emotions and the endorphins make this an emotional decision. And then over time, once you master this framework, all you do is you say, here's my trade results table and my big stack of results, and I know what my coin flip is, and I know what my average win to loss is, and I know what my average +1 standard deviation is, and then I can tell you, yeah, I don't mind that you do that for an 8-minute. So you ask a monkey a question, that's the answer you're going to get. That's what I think about the decision to set profit targets. I love profit targets on intraday trading because so much of that is happening for reasons we cannot possibly know. The shorter your time frame, the less you can even pretend to know why things are moving the way they are. Because there could have just been one guy among, hey, there's 10 million people that are actively trading Microsoft right at that moment. And because one guy came in with some huge frickin' order, and in that 8-minute period, his broker decided to fill it all, and nobody else comes in, it bursts up to the VWAP and then fails. I don't know. That could have happened. But the shorter your time frame, the less you can even pretend to know that. So I just look at, hey, I got 4R in 8 minutes and I want to lock it in. Done. It's triple my average win. Done. And I have a plan on how to re-enter or reverse or just stand aside because I made my daily target. That should all be part of your trading plan that is reversed. And then you can have all sorts of contingencies for things that you want to do. Like maybe you made your daily target and you're out of emotional energy. Okay. Done. No, I'm still in the zero state and it was early in the day and I'm ready to go and I can reframe the next one. And I just take the next trade frame exactly the same way that I did this one. Then I have a chance to produce a histogram that looks like industrial production, like the house, the seller of lottery tickets that the emotional monkeys are buying. That's where our edge can be found. So the reason you asked me that question was because this is early in your career of just trying 1 minute bars to see what it's like. I'll tell you right now that aim for 2, protect 1, assume that your average win is going to be 0.7 and your average loss is 0.5 until proven otherwise. So if you ever get past 2R, you got 3 times your average win, and now you are clearly into abnormal gains. And then anything that you do to exit to preserve an exceptional win is approved. Your sniper spoke, he took the shot, and he locked it in, and he gave you the extra benefit of an above average win. You cannot possibly hate yourself for doing that, even though that thing went on to further glory. Just say, okay, in retrospect, but I can't trade with retrospect. That just means that I need a plan for re-entry upon continued success, which is where that entire trade framing process and knowing what the series of upper limits of targets are and how much time is left in the trading session to reasonably achieve those. But you better pay attention to the power of the VWAP as a real boundary between negative and positive sessions. The VWAP is hugely important. By the same token, the power of a Z3 excursion. If this thing is like monkeying around in here and then suddenly you get this, dude, you have all the information you need, which says, hey, this dragon exit, which is a little bit slower than price, that dragon is your friend because it preserves all of the abnormal gains of this move. And the Z3 rollover is a marker that you approach. You just found the boundary according to statistics. This one, you found the boundary developed by the liquidity of the market and the VWAP. Both of those are returns to rationality, the end of emotion. And your job is to decide how much am I willing to give back. If this was my average win, and this is my average +1, I have to take this. Until you breach the average win and the above average win, the PSAR is probably good enough. But if this really was an explosive move up like Microsoft was, do you think there's enough money in the world to make a $1 trillion company continue to behave like that forever? No, at some point it's going to fail. Where could it fail? At the VWAP? At the range stat? Those things are statistically based markers of where the end of buying enthusiasm goes to die. And as fast as it goes up, it comes down faster. So you better have a plan on where to get out. Let the wind take care of itself. Your job is to figure out where is the satisfying exit point that I can take that ensures that I have no regrets. No matter what happens afterwards, I am satisfied that I took a professional win to lock in the gains that I need reliably each and every time. That's the secret to preserving your sanity going forward, is to be satisfied with the professionalism of your exit strategy. Now, eventually you're going to say, my professionalism needs to include re-entry so that I don't lose my mind. If I have a really good re-entry strategy, then I can take these exits without any hesitation because I know how to get back in. But I also know how to stop and reverse, or how to just stop and let it go and wait for it to fail to find the next place it's going to give me a cotta too. So learning when to stalk and learning when to strike ends up becoming, and the strike is both the entry and the exit. And then as this thing is moving in your favor, you're just ratcheting up your stops to lock in more and more pieces of what is your money. As you lock those pieces in, just think of that as that, yep, my money, my money, my money, my money, and you're giving it room. And then it says, okay, I agree, there was my professional gain, and I gave you enough room to work, but you failed before you continued to my satisfaction. So I get out. Oh, and now you're going to continue up? I know how to trade that. There's my risk. As long as I have a target to the upside that gives me 2, I know how to get back in without any hesitation. That might be 5 seconds later. It might be 5 days later. It's the price that gets me in. I would actually rather get in after just 5 seconds of being out, because that means that the pullback was negligible and it just kept going. The longer I have to wait, the more this looks like a new trade. And then I don't mind being out of that trade for that whole period of time when it did nothing. The longer it takes before I re-enter, the smarter this looks. But you won't remember that in the moment that this thing, you took the exit and it just kept going. That's the only one you remember, because it gets coated with the emotion of regret. So that's why you need the trade log and the histogram and the math to tell you what the boundary between normal and abnormal wins are. And you put a average plus 1 standard deviation to ensure that you have a robust definition of normal. And abnormal. Those are the good ones. This is where you invoke the sniper to preserve most of that. Even if you did something as simple as saying, well, if I'm never going to let it go back below there, I'll just take the maximum favorable excursion and I just want to keep half. Done. Done in one. Or, in your case, it came into the VWAP and you were holding 4R, and that's already 5 times larger than you had any reason to expect. Just enjoy the 5R. Don't question the sniper. You had a plan, you executed, and you made 5R. This whole discussion is to teach you how to put that into context so that you don't unfairly punish the sniper in the moment who took the shot. We don't want to bruise that guy with information that came to light that he did not have. Well, we can do all of that analysis of the trade frame in order to place that decision inside. I'm not worried about the exit. I'm already past that. I'm thinking about what is the re-entry up, the re-entry down, or the no trade. That's the decision that matters. Once you decided done. You took the shot. Put it in there. How about just put it in there so that you lock in an abnormal gain, and then just start planning what to do if it gets there. Then if it never gets there, no harm, no foul. And you let it grow, and then your regular exit takes charge of it. So that's perfectly workable too. All of that is connected to the essence of the 2R battle drill, which, as you get deeper and deeper into that, is really just that. And you realize that from the moment that you enter, every time it starts retracing, and once you have no lose plus dinner for 2 in, and you've locked in that little wedge, dude, all of your anxiety should disappear. You have no existential threats anymore from that trade. It is now a science project, and your job is to get data. And don't let it ever come back. So you got to be ruthless about, once you put that stop in, it's there. Then on the upside, if you have a target, take it. I don't care. That's fine. This is the one that I'm concerned about. Get to no lose plus dinner for 2, so that we can engage in this kind of thoughtful professional discussion about industrial trading and industrial manufacturing process. Remember, all I'm trying to do is make bricks of average wins, and then as I get better and better, the size of my brick gets a little bigger. And imperceptibly, I'm now making cinder blocks. And this thing ends up scaling from success. But the architecture of the brick is always the same, but it's where the average win is. The average win is your brick. The more times that your average win is greater than average loss, that means the size of the brick in a positive expectancy system is slowly improving. And then the boundary to +1 is slowly improving. As long as you never let abnormally good wins ever fall back below that, and certainly below that, you're always going to be getting better and better, and the size of your brick will expand, but you're not making any changes to the architecture and your process. That's where the repetition comes from. The goodness of the repetition comes from. Okay? Now, what was your original question? Oh, yeah, what do I think about taking a profit target? That's what I think about taking profit targets. Under certain conditions, I love them. The other time I love them is when, hey, I'm at the VWAP and I don't know what to do. Take it. When you don't know what to do, take the exit, and half the time you're right. So let's just do that. And you didn't lose any more money on a winning trade. Done. I'll take that trade-off every day, psychologically. Because now you can worry about what you should have done while you're still having money in the bank account for an abnormally good win. Just enjoy that, you know.
Thank you.
So there's a lot of gold in that mine today. definitely worth re-listening to, and
Ken,
add that to your stack. Yeah, Damien.
I have a question, because it was asked by other individuals, when we chat during the day, because they were asking me what I was doing, and I'm going to pass it along to you because I want to have your thoughts. When I put on my my trade on the SPY on the 1 minute chart, I start with a trailing stop of 40 cents.
Yeah.
Once I get to 1 hour, I reduce it to 20 cents. Once I get to 2 hours, I reduce it to 10 cents. Is that a good strategy?
Yes.
Or
Yes.
okay?
Why is that? Why is the answer yes? You tell me why the answer is yes. Here's what I want you to do. It's a good strategy because of these reasons. What
Okay.
is the evidence for your claim that it's a good strategy? And then what is the evidence for the claim that it's not a good strategy? It can only be because of opportunity cost is much greater than the locked in benefits from this side. We already see how good that strategy is. So you now got to go. I had this frame and I saw 2 to 1 and I took it and I got out here because you're essentially using an accelerated PSAR, but with money management instead of the black dots.
Yeah. Yeah.
So what you got to look at is say, if I just kept the same 40-cent stop, so this is what price did. And this is the 40-cent stop. Fair enough?
Yep.
And now your stop was at +1. Instead of being here, you accelerated to a 20-cent stop. Now it looks like this. Correct?
Yes.
And then at 2R, you accelerate, instead of being here, you accelerated to 10 cents, and now it looks like this.
Yes.
So the question is, from the peak of maximum excursion, if that thing actually sold all the way back to 40 cents, but you got out at 10 cents, then your decision gave you an extra 30 cents. Yes?
Yes.
That's if this intermediate stop was never hit before this. Then it's
That is-
easy to show. But what if this thing did? Let me draw it in blue.
I mean, the way I look at it
Now,
is, I can
listen,
always-
listen.
Okay.
If this thing did this, and that's to add re-entry rules, now you got to completely add an entirely new system for re-entry. But just on the basis of, is that a good strategy or not? If your path looked like this, and your 40-cent stop was this, but your 20-cent and then 10-cent stop was here, yeah, you gained this little extra piece, but really you missed this much.
Yes.
So if you're going to tell me that, well, I'll just handle this with the re-entry rule, now suddenly you have these two modules, and now you got to say, is the re-entry rule adding enough extra value that when I take the combination of the savings that I made here, plus I'm still getting that big move, most of the time it doesn't do that. Most of the time I'm collecting the extra 30 cents and I'm happy. So you actually, Just remember that if you had the 40-cent retracement and you took the reentry, you still have, hey, what if I just kept the single 40-cent rule and had a reentry here? And now the other one, you have to compare apples to apples. What happens if I use the same reentry module on the original 40-cent stop, which is very simple, versus all of the extra management that I have to do to go to 20-cent and then 10-cent and then manage a reentry? Well, I can do the same reentry on this one, and I don't have the extra complexity. So once you start opening that can of worms, you have to compare it fairly. It's not fair to say, I've got this really complex system with a reentry module, and I'm comparing it to a system that just takes the first leg and only goes that far with no reentry. Well, that's not fair. Yeah, but what if I can automate this so that there's no cognitive load? Okay, well, now that's even different. That very complex system is no longer complex because your system was really come up with the rule set and then let the robot execute it. So it's actually not complex. It's the same level of cognition. So understand what your systems are getting. I would then you got to start part of your rule set, the studying of your trade frames and your case studies is to say, from the moment I entered to the moment I exited, what happens afterwards? What am I giving up? And what am I avoiding by taking my exit where I do? So I have the expectancy of this, and then that's your expectancy. And then over here is your opportunity expectancy. That's a whole new can of whoop ass for analysis. Now, which is easy to do for swing trading automatically with the little analysis tool that we use that takes a look at, hey, here's what my swing trade did in time T. Here's what it did in the 2T time frame. And I can see where the maximum favorable excursion. If the maximum favorable excursion is always happening in the first period, I'm not missing anything by taking my exits when I take them. But if I'm routinely getting maximum favorable excursions here, I either need to take the exit and then do re-entry or reversal, or I need to relax the conditions to allow me to get the full move. But when you relax the size of the stop, that just means now I got to go back and see how many dollars did I give back. So instead of taking the 40-cent loss, I'm taking an 80-cent loss, and it never re-entered. So that's what I would tell you is that the system that you have is taking measured moves at reasonable profit targets. Take a look at your daily performance as a machine that produces R, and now plot that as a histogram and show me that you know what that thing is doing once you have 30 days worth of data. And
Okay.
that's what you're proposing to change. And I'm going to tell you, have your head examined before you change that.
Okay.
Think about changing it, ask the questions, but don't you dare change that system. I would say run that system and then run a separate system with the other rule set with a different pile of money. And then compare real dollars with two separate systems. And now you have system 1 and system 2.
Okay. Got it. Thank you.
Don't try to make system 1 some god-awful Swiss Army knife of confusion. You got a clean, simple rule set that's better than a 50-50 coin flip that pays better than 2-1.
Yeah.
Don't throw that away.
Well, I'm not going to. That's why I was asking the question.
So that's the answer to the other guys. What is
Thank
the
you.
evidence? So all I did was say what I want you to start thinking about. What is the evidence? What I am asking you to do is produce the evidence to complete this chart. What you asked me was, hey, Ken, what are your beliefs about this? Because you know my beliefs are based on evidence. Is that a substitute for you doing the work? Or was it a question to ask me if I thought it was worthwhile exploring the research question, and how would I set up that research question? If it's B, then yes. If it's a shortcut, say, hey, well, Ken said that it probably doesn't work. I'm good with that. Well, shame on you. You got that far, and then you let beliefs take over from evidence. Even though you have your evidence is proving that you've made that performance, and now all of a sudden you're going to stop generating your own evidence and substitute my beliefs? Why in the world would you do that? Well, I mean, there could be reasons. But really, you should be asking this of me, is this a fruitful of the areas of which I have expertise of exploring the research space, does this look like a promising research question? That's a fair question. That's what we want from research advisors or the other members of my accountability group, because what I'm doing, go back to the start of this, I'm pooling the experience base of these guys, and I got to be able to trust what they're telling me. And is what they're telling me based on their evidence base? Or is it being based on their beliefs? I don't even care what their beliefs are until I've seen their evidence. And then I can make a judgment about how good are you at coming up with beliefs based on the evidence that you have. If it turns out you've got pretty good beliefs that are based on evidence, I'm willing to listen to your beliefs. But my default position is I don't really care about your beliefs until I've qualified your process for going from evidence to beliefs. You have a process for doing that. That's the thing I care about. I don't care about your beliefs until I've inspected the evidence and your process and how you got to the beliefs. With what degree of confidence. Now I can decide if you're a person who's helping me understand the elephant from the side of the elephant that I can't see, because you have access to evidence that I don't have. That's the power of the accountability group. And so how you manage that without hurting people's feelings or keeping the thing going is part of the values of the True Story Circle, and how we treat each other for the courage of offering their beliefs. Well, I don't want to share my beliefs with Ken because he's going to say my beliefs are bullshit because I don't have any evidence for it. Well, if I say it that way and hurt your feelings, either toughen up or maybe I need to change my style of communicating. What's the probability of either one of those happening first? Well, I mean, I am who I am, so I'm trying hard not to judge other people. What I'm trying to do all the time is saying, look, on the table, we're putting beliefs on the table from all our perspectives, and each of us came from a basis of evidence and deep-seated beliefs and assumptions and experience. And so we're offering those ideas. So we went down deep in reflection and thought about it and came up with our question or our story, and we're putting that on the table. And so when you guys ask me those questions, I'm taking it as a given that you've done your best thinking on that, and you're offering your best possible question, and that's an act of courage to put yourself out there in public to say it exactly that way. And so I'm going to respect the effort of you putting your best question on there by giving you my best thinking on it in order to improve the idea on the table, while at the same time trying to communicate that I'm only talking about the idea on the table for the benefit of our mutual understanding of that I'm not judging you or saying anything about this. I'm trying to talk about the idea on the table. Yeah. So there we are on that. Fair enough? Yeah. Hey, so Greg, I need you to tell them that I'm going to record the message and record that later. I can't get the reports done in 7 minutes. So I will produce that report. If you can pass that message on to them, and I'll get everything. But I felt like this was important to include because I'm going to make this available to them as part of this nightly podcast, and I'll follow up with the analysis of the day. Okay. Thanks, guys. Good
Yeah,
work.
thank you.
Good work. Good questions.
Thank you, Ken.